Anything else that anybody else wanted to touch so far?
Yeah, I was going to say that it's never fun to get that rating or the decline or any of that. Um, but part of this is understanding that you're getting into the banking business. Through co-generation, you're plugging into an established entity and you're co-owning it. You're a partner with that. So on one hand, it's never fun, but on the other, you don't want the insurance company to accept all risks.
Right.
You don't want them to accept risks that they can't mitigate, that they don't have enough time to mitigate appropriately. That's a prudent business partner. And that's how the company is run. So it's, like I said, it's never fun. And Bill, I'm sorry that was written the way it was and interpreted the way it was. I'm sure you could fight that. But the fact that there is a boundary is a good thing for the sustainability of the business, the long-term health of the business. They want risk. They want the risk they can effectively mitigate, that they can understand and mitigate. They'll take that all day long. Two, we spent a bit of time talking kind of about whole life specifically, but I always point back to it's a process. That's a product. Banking is a process. And like the fact we don't understand that is a problem. If you can't understand the problem or understand your identity in the problem, which character you play in the problem, don't get the product. That's like going all the way back. The duping, it's because you didn't understand the other pieces. You didn't understand what you were signing and agreeing to because you just went straight to product. You got to understand the process. You have to understand the problem. You have to understand your role in all this, both as the borrower, really the borrower, the capitalizer, and the owner. Everyone forgets about the owner. And that's kind of hinting toward what I just said. If you're co-owning a company, you don't want your company taking on bad risk or risk it can't handle. Not saying bad risk that you can't mitigate. You're ill-equipped to mitigate. You want it making prudent business decisions. That's what they're there for.
Let me jump in one more time then. Because I had another product, I guess, point, because I recently got a new policy and I was able to get one, but even to that, there were limits, right? So based on my age, my income, my driver history, my medical, my everything, because that's what it comes down to when it's whole life insurance, is the insurance company is going to look at everything, right? They're evaluating that risk. They're going to look at everything. I was able to get a policy, but there was also a limit even on how much I could get, because that was my question to them. Once I'm approved, I'm like, well, how much insurance will you give me? Because knowing what I know, having implemented the process, right, of infinite banking, using the product of insurance from these mutual life insurance companies, I want to know just how much they would let me have. And I was going to go for that, right? And I did. But point being that even so, there was a limit. And of course, in Bill's case, the silver lining is this, and Nelson talks about, being uninsurable in the book. There's a chapter on it. And even if you are insurable, there are limits, right, based on your age, your net worth, or income. The silver lining was that he was still able to put that capital into policies on somebody else, that he had insurable interests in, which is, again, juvenile policies, like we talked about earlier, or getting policies on a sibling, policies on a parent, and such like that. But when it comes to what was it you just said, Joe? I started to pull up. I got off camera here. I've got. Well, maybe I should keep it off camera. Actually, it's got the personal information on it or whatever. But I got a statement on my wife's policy, which is our second oldest policy. Now I can't even remember why I'm going to be making this point, but everybody who's listening, you heard what Joe just said. Go off of that. I'm talking with my wife yesterday about this difference, because you were talking earlier about you can bank with anything. All right, so let's talk about that process for a second. My wife and I have been banking with this piece of paperwork, all right, that I got to protect and not show on screen, I guess, or whatever. But we've been banking with that policy for, I guess, is it 9 years now? 8 or 9 years off the top of my head, right? 8 or 9 years. All right, so we talked about, well, how does that look different than banking? Because banking is a function, banking is a process, than with anything else. All right, so let's just use that regular savings account from, as a versus with this policy. Because we've had money going in and out of that checking account, that savings account for the past, 8 or 9 years as well. So right out of the gate, was there a death benefit? If we say one more thing about product real quick. No, there was no death benefit. If I'd have died or she'd have passed, right, in the past 8 or 9 years, there would have been no net worth boost, no windfall, no tax-free income windfall to the family because we had a savings account with a commercial bank. That wouldn't have happened during that whole time frame. So we had that benefit always. And did we put money into that policy? And were we able to access money because we had that policy just like a savings account? Yes, we both put money in and were able to access, because of the position that we had, money from that policy. But then, of course, we talked about, because this is a big deal for her, the death benefit that started with that policy, right at $500,000. It's not that anymore. It's grown by hundreds of thousands of dollars in that time frame. Hundreds of thousands of dollars, over $200,000 more dollars. Incredible. Another $250,000 growth. Incredible. So not only was that not a static number, but that's grown. So for legacy purposes, protection purposes, it started out great and it just got better. But when it came to the process of putting money into the policy, paying premium, and then still maintaining over that 8 or 9 years access to money at the same time, that happened. Then, we get this statement yesterday and we're seeing this $500 dividend. And talking about, well, how cool that we had this growing net worth, this growing level of protection for our family, while still maintaining, and this policy's gotten super efficient. Virtually every dollar that we're paying in premium now, we're accessing, if we choose to, via policy loans. Virtually dollar for dollar. Actually, it's flipped. It's a little bit better than that. And then to boot, we get a letter in the mail saying, hey, you got $500. What do you want us to do with it? Do you want the money? And just how cool to get a random check, right? And then if you talk about a system like, JDew and we've been talking about, this isn't our only policy. We've got 7 policies to date so far. So that process is similar, and yet it has so many advantages because of both what the product is, but also how we're using, right? Because we're not just owning this policy and leaving it on autopilot. We're using it for the process of banking in our lives. And that is what has directly manipulated in a positive way the death benefit, the cash value, the dividends that we experience because of how we're using the policy. So I don't know, just trying to celebrate a little bit with y'all and tie up my perspective on the conversation as well, just because of where I'm at in life. Back to you guys.
Well, what's good about that? See, as I found out, if I got the policy on me, I could only enjoy the cash value, the banking. When I die, I'm dead. Now I can enjoy both if she checks out first. Now I gotta go check other people. I got the money, I got both. So I might have to split with the insurance company, I guess.
Kate, are you okay? Blink if you're being held hostage.
Just check. If I'm not around for a few weeks, she's flying.
Bill, you messed
we'll
up.
definitely
This is on video.
But
Did
Hey,
you record that?
I just have to,
go ahead, Trish.
I just wanted to add in here, the life insurance company really should have contacted me about you guys' health, because I could hardly keep up with you guys in Columbia.
Well, thank you
These
for
two
that.
are no joke when it comes to being able to walk for miles.
When Kate's talking about taking a mild walk, it's normally 8 miles from what I've gathered. It's ridiculous. I'll say this, just because we can sit here and we can laugh about, owning policies on other people and what that implies for us. And I've heard both ends of the spectrum where, somebody will talk negatively about somebody who did something proactive, like getting a policy on somebody else, and then heaven forbid, but when that person died, that individual that owned the policy got the death benefit. And people just have a money message. JDew uses that term, money message. We have some very poorly conceived or preconceived, or we've been propagandized with what money is or what it shouldn't be. It just, so many things are wrong, I think. And people will have a bad connotation or a bad feel towards that person. Oh, they were just trying to, But then here's the other side. Bill's joking and laughing, and Kate's laughing. Nelson himself, when asked about, well, shouldn't you be diversified? When it came to just, his philosophy on money, his philosophy on legacy, he said, well, I am. I'm diversified in lives insured. And I believe I've said that before, but there's something to be said about that. I mean, if we are going to graduate, and we are, if we're going to pass, and we're going to pass, yes, why not be diversified? Why not have all these advantages? We can joke and laugh about it, but at the end of the day, it's going to happen. We might as well position ourselves and our families in a way to grow and scale what we can do in the meantime. And you can have diversity by having diverse lives covered. I'm just saying. That's what Nelson said.
Well, I agree with some of that. The way I brought it up earlier with my mother and my brother, and how we're going about making sure that we can handle the grief stage of her graduation and passing on to the next life, is a completely different mind shift from someone who's on a spectrum that's like, no, I would not let anyone else have life insurance on me because they'll get rich when I die. What do they want me to die or something like that? And I forgot about that for a second, because you brought that up, Jesse, very well. There's so many issues out there with the way we think about money, the mindset that many families have around it, because we all think each other in our community environment of our family, we think each one is valuable. We think everybody is valuable. And so we're going to lose when they're gone. And other people might have the opinion that, no, I don't want anybody to win if I'm gone. And I'm like, how selfish is that? And I think that's very normal. It's very normal. There's so many times where, you see a couple on here. I love these two here, who are the couple represented on our call. And, we've sat down and broke bread with them and had a big time. That was a great night in Indiana when we first got to hang out with Kate. I think we knew Bill before that, but and you see so many families, couples who are not on the same page when talking about this. And I talk to them, let's say it's a him, and he's looking to expand his system, and I give him questions and thought process to expand and rethink his thinking. And I said, so out of all the money that you make, let's say 10% is going inside this banking system for yourself. You've got a policy, you make 100, 10,000 a month is going inside this policy. Where do you put PUT, the other 90% of your money? Is it in a system that's going to guarantee to grow and cash flow for you and have a loan provision against it and earn dividends like Jesse's getting every year and being able to? And they're like, no, actually, I'm not doing that. It's like, okay, well, let's think, or should you consider expanding this to your spouse, your plus one, to your kids? And they're like, they freeze, and it throws me off, because I'm like, oh, you don't have a money challenge, which you think you're asking me. You have relationship problems. You have a relationship problem. I can't help you with that. We can try, and I'll make fun of you on this call as much as I can, but your challenge is not money, it's relationship. If I'm going to have a great relationship with my mother, I'm letting her know, you do realize we are going to be lost without you. You've been a part of my life since day one, 1984. When you're gone, there's going to be something missing. Maybe we can replace some of that with some money. We can't replace you, but I do need to put you in the ground. And there is, within 15 minutes, where my kids go to school, 15 minutes from where I'm sitting right now in South Carolina, if you needed to be buried in that cemetery in our town, there's another one 20 minutes the other way, past Costco, And that's where people get buried in my town. These are active, you know, remembrance parks or whatever we're calling them these days. It's going to cost me 30 grand to put you in over there because when everybody comes around, we're going to have to feed them lunch too. So I'd like to take care of that now and plan for that in the future. And I've talked about graduation and death a little bit more on this particular call than I've talked about IBC just because I mentioned my mother, but that's a very important thing to talk about. And I'm like, the reason we can talk about that in my family is because we can tell each other the truth. And the truth is, Mom, you are going to go one day, and I need to plan for that. I'm the oldest boy. So who's supposed to handle this? Who's supposed to take care of it? Because you have other siblings. I have other siblings out there, your kids, and we're all looking at the other one. You know, he's watching football on the couch during Thanksgiving and like, he ain't going to handle it. I'm going to have to handle it for him. So can we talk about it? And so, you know, when you see couples and families understand this principle, it is a positive thing to say you're going to die. That is a positive phrase. It's a negative thought, die. It's a positive phrase. You are going to do something. So how do we plan for it today? And we're dealing with guaranteed contracts here. So I'd like to be guaranteed that at least lunch can be covered after I have to sob through this eulogy. I mean, at least let me cover lunch and put you in the ground, you know, and explain to my 5-year-old. So on her side of the family, grandmother passed this past month, May. And so our 5-year-old was talking about, he was upset for he was looking forward to one thing at the burial service, the graveside service, and then he was disappointed at the end. He's looking forward to seeing a skeleton. Right? It's a positive thing for him, right? He knew great grandma is old. He knew that she's going to heaven when she dies. He knew these things. It's positive. It's okay for him. He's 5. He didn't have the relationship everybody else had, right? It's sad. She's gone. And number 2 is he didn't get to watch them lower the thing down, right? That was the negative part. Everybody left and goes on to lunch. And he didn't get to watch it go down, didn't get to see a skeleton, you know, but like we can talk about these things. And I think there's a problem with the reality of maybe Western America and things like that was like, we're not telling the truth to each other. One day I will stop working. So where does the money come from? If I don't plan for it, it's a GoFundMe, or I'm going to have to rely on my friends from church. I'm going to have to work. I need to vote in the worst people in the government who keep spending the money because I need them to offer me money that doesn't exist because I did not plan. And so it trickles down to all these other issues, I think, by not telling each other the truth. The truth is, Mom's going to go one day and it's going to be terrible. So I'd love for some parts of it not to also be terrible. And there's nothing like the calls that we've all gotten in the last few years of helping people understand this. The calls you get after someone's gone in their life. I'm sorry, the calls you get after, someone's gone in your prospect or client's life, and then they call you and they go, okay, we're going to take care of this next time because we're all going broke. We're all mad at each other. We're all tired. We all missed work. We all don't know what to do. And I'm like, well, that's why at Thanksgiving, there's a portion of our weekend where we talk business. Where is everybody at this point? What are we doing? What's the plan? When are we coming back together? Because I can't make it this Christmas. Are you coming back? Is she coming back? What are we doing? Because we are family, and our family business is to handle our family business. So I think that's really important. I did not grow up in a household that talked about it like that, but obviously my brother and I both became advocates of this type of conversation. Jesse is the man at this. He's very good at it, and he leads it as the patriarch of his family unit. Extended family unit to do it. I just think it's important. And I think I have a lot more peace to be able to talk to my family. I have a lot more connection with them going like, well, I'm not staying around forever. So who's supposed to take, I'm the oldest kid. So I ain't going to any of your funerals. Let's make a deal right now. I go first. Like, I go first. I'm not, so let's just plan and let's think about it, you know? So that's my thought.
I love that. Can I add?
Let me
Sorry.
just say this real quick. don't work for Coventry because those people, their kids are doing well and they don't need insurance. So they'll sell it. They're sitting on a gold mine.
The commercials.
I love that you were saying we don't speak the truth to each other. I mean, I think that is just so true. But to add to that, not only, you know, the beautiful thing of this, not just looking at the negative side, but the really positive thing, Mary Jo always would say, it allows you to properly mourn, right? That death benefit. So not only does it cover burial expenses and so forth, but I love the fact that I'm getting as much life insurance on my person as I possibly can, because I want to see the wonderful benefits that that can bring to my children and my grandchildren when I am gone, right? Like if you have to walk through grief and loss, and one of the reasons the insurance company has a limit on the amount, right? Just to think about this for a second, you take your income factor, how old you are, times maybe you can take your income times 30 if you're younger, or you know, a little bit older, it's your income times 20 or 15. It goes down as you get older. But all of that income that they're looking at to create your human life value is the amount of loss that a family is going to suffer when, you know, like someone in the family that's a breadwinner passes away. I have far too many friends who were widowed young and were not prepared for that. And it's years of income gone from their life in one fell swoop. And it has affected some of these folks for, you know, 20, 30 years yet to live without that spouse. And so to be better prepared for that, so that it's a loving thing to do. I guess that's what I'm trying to get at, right? It is a loving and kind thing to have those conversations and be prepared for that. And then even have enough of that death benefit for far more than the burial expenses, but also perhaps to, you know, help send the next generation to whatever schools they need to go to, or whatever it is that is going to benefit them to help them flourish in their lives. So I wish I could just preach that from the mountaintops a little bit more for people around you, because they just don't realize, they're not thinking about it. You're in the everyday, nobody wants to consider death, and yet it's the most guaranteed thing, right? Unfortunately, but it's true.
So I'd like to keep fielding this. I'm going to dig in deeper here because I don't think that there's a better time, because we're already here. I don't think there's a better place or group of people. And because this can typically be a hard conversation for folks, we'll have it for them, right? And I have my own intentional reasons of furthering this conversation, just because I, like JDew, I'm looking up and down in the family tree now, you know, because Nelson says think long range. So I'm thinking, you know, for myself and for everybody else, how can we level up? How can we take this to a whole different level? So typically, of course, covering the financial loss of a breadwinner, covering burial or ceremonial costs. I love the topic that you brought up, Tricia, where you're talking about being able to grieve properly. I don't think that people fully walk through that part enough. Like just taking a moment, and again, because it's hard, it's not fun, but I do believe that it is good. What happens, you know, when this parent passes and so has to fly in from the other side of the country? We all are looking to take a week or two off of work. If we could, we would probably choose that. Like in that scenario, if we could choose between, oh no, I got to be back at work tomorrow, we probably wouldn't choose.
Yeah,
Right, go
I
ahead.
was gonna say, because one of the things I hear sometimes too is I'll have a couple on with children and we'll be talking about it, and they'll always inevitably think, well, let me put the most insurance on the husband, right? Who's maybe the major breadwinner. And I know that's changing a lot in people's environments today, but just typically, right, that still is the case. And they won't think about, well, don't need as much on the wife. Well, let me tell you, that husband is not likely, especially if there's children in the home, to be going back to work anytime soon if that wife passes away. or vice versa, right? I mean, there's grief, there's emotional trauma, there's all kinds of things to work through. It could be 6 months or a year of just needing to, take care of each other and figure out a whole new life. It can make such devastating changes in a family.
Yep. So I'm trying to keep putting stuff out there, and y'all do the same. Families ending up in probate court. I mean, if we could avoid that, would we like to? I would say yes. But I don't think we typically think about that. What about and when you're talking about big numbers, I mean, maybe folks are paying more attention when there is bigger money and they're having conversations with their lawyers or CPAs or whoever else is relevant, their insurance professionals, their advisors, because they're trying to avoid estate taxes and stuff. But I really do think that there's not enough time that goes into thinking. So let me just put it back out there to y'all. Tricia just added some things. Y'all add some more. What are people not thinking of? And I know this isn't necessarily infinite banking, and yet I would say that it is. Because Nelson gave a great example of intentionally building a system of policies on so many family members, dozens and dozens of policies, right? And then not only that, but he lived a life of example where he's talking about, well, I'm teaching Mary, his wife, how to be a widow. And I'm handing off these policies so that I essentially have zero net worth when I graduate. That's what I'm saying. I've heard about what Nelson did. He's transferring ownership of these policies and such. So anything else that y'all would add to that, I'd love to hear it.
So the idea of human life value might come into that conversation. Like Tricia, what she's kind of explaining is if you were to add up all the details of one's life, the economic details anyway, so their income and their assets and their potential social security and so on and so forth, you have this maximum number that became like widely accepted in 1924, I think it was. The book Economics of Life Insurance, I think that's where it's cited, but that's where it started. This idea that you can add up all these income factors and say, how much is this one person, quote unquote, worth? What is their economic value, the human life value? So the actuaries use that to figure out what the maximum you can buy. Like nobody can, at this point in time, nobody can go to an insurance company and just pick a number that's higher than that. You can't. You have to justify the risk, essentially, for the insurance company. And all of the things Jesse just hinted at, and I think you can go even deeper. Why this almost doesn't make that, like, it doesn't make as much sense as one might think. For example, if Jesse passes and relatives have to fly in, their expense and the time off they would take from work the week that he highlighted, that's not attributed to his economic value, right? That would be in addition to his economic value. Mm-hmm. So that's a flaw in that thinking. There's also a flaw that over time, the assumption is your economic value is going down because you would have realized it. That's not actually a natural thinking, because most of us, as you're building assets, as you're buying, productive assets, generating income in more creative ways, your value is going up over time. So we're kind of at odds with this concept that the most insurance you can really get is actually very early in life. Like the highest multiple on your income is very early in life. And that multiple drops over time and eventually gets replaced by your net worth. And I don't want to get too far in the weeds, like for people watching, but effectively there's dual ways that you could figure out this maximum number. One's based on income, one's based on assets. And over time, the income drops and the assets take over. So it's your agent's job to know which one makes most sense for you. But what fits in there, we can justify all day long. You can figure out several reasons for that. You're entitled to that maximum number then. So I would highly suggest you take Tricia's and Jesse's approach and say, what's the most I can get? And lock that in. You're entitled to it. They're not going to give you a penny more. You can't be overinsured. right? They're not going to overinsure you because there's risk involved.
Mm.
Anything below that is a personal preference. And some of the things you were saying, Jesse, are like really like deep, like the idea of really thinking about grieving. If you don't grieve and take the time to grieve, it's going to manifest itself in other ways. The stress of not dealing with that will cause illness. It will cause look up the psychological impact of not dealing with. It's a real thing. How do you put a number on it? I don't know. How do you put it? You can only say what someone's salary is and multiply it by it. You can't say what the raises would be and the creative, like starting a business in 5 years would do. All you can do is based on today and say, okay, this is the maximum based on my salary today. It's not your total maximum though. Yeah, I think when people hear that and it's like there's an actuarial correct maximum number, that is the right number. Everything, no matter how we dress it up, is a personal preference. And people get really creative. I think JDew mentioned Truth Concepts. I think they have like a crazy calculator. You can add like school for kids and burial plots and all these cash flows in to get to a number that looks oddly specific. It's a personal preference. It's a fancy personal preference. If it's not that top number, it's a preference.
You know, Joe, what sort of
Banking.
jumps at me is when I think about, which I,
True.
you know, as we get older, I think I heard this the other day and it made me laugh. Said that, you know, you stay alive long enough, you become a philosopher. You just naturally become that. Like, and I feel like I'm getting closer to there in that way, whether I like it or not. It's just happening. It's like, and so when I talk to more people about it, I think what I've come to realize, because we talk the game all the time, that most people don't even understand their relationship with money and what it means to them and what it represents for their values and how they live their lives. I think it's just kind of sometimes not really thought of because they're just so busy in life. Everything's a hurry. And you know what I've come to realize when I talk to people about it, they really don't know. And it's a crazy thing because when they start reflecting on it, they start realizing kind of how these things fit and how money drives kind of what they want in life. And it shifts the way they think about it, right? And it's fascinating because most people are just driving towards money with these accumulation sort of mindset. Just got to get the most as possible. I'm not even sure why, really, right? Whether it fulfills my life or not. But, you know, when we reflect on IBC and life insurance, like the only thing I can count on is what we talked about before, that we're leaving at some point. And our biggest asset is us and our ways that we contribute and live our lives. I said, where would I want more of my money tied to, right, than that? And when you think about it from that philosophical standpoint, you're like, I want the most as humanly possible. If you want to do good in this world, right, and live a fulfilling life, like why would you not want to have more, right? But it's often very tactical, technical, and rate of return, and all those sorts of things. But you know, when you really flip it and say, what does this actually mean, like for our family and the steward of that and the generational wealth it can help support? You know, I think it becomes a much deeper connection. It has for me personally, right? Like you said about grandchildren and great grandchildren. I can't imagine. I envision those days if I ever get a chance to meet them. What are they going to take from the things we were building decades before? Does that matter?
What you're speaking to, Tom, it just reminds me of, you know, the scriptures of where your money is, there is your heart also, right? So it's just totally how you handle your money reflects your heart. It reflects your values. And so I do think, to me, one of the most beautiful things about the infinite banking concept using this whole life policy is that you're able to leave a legacy for your loved ones. And like I said, I think that's a loving thing to do, right? I do think you have to have some measure of wisdom and control over how that money is spent after you're gone, so that it's not, used to destroy lives, which, big sums of money just being given to someone without any understanding can be a threat as well. But also the fact that you get to use your money today. It's not locked up. I think we just don't realize how much the older you get, the more, as you were talking about, as you get older, you become a philosopher. The older you get, the more you realize that the most valuable thing in your life is the time that you have and how you spend it, right? So when we've locked money up in the typical, let's use that word, as JDew said earlier, the typical financial ways of doing things, right? And we're just trying to accumulate a pile so that we can live one day, someday. We've lost all this time where we are actually able to live out, our dreams and our values today as well. So I just think that's why it's such a wonderful thing, because it is able to do both, right? That saving and for the future and spending today as needed, so that we're not just waiting to live for one day someday. And I learned that lesson the hard way with watching my brother. He did everything they told you to do, buy term, invest the difference. And he spent his whole life living for one day someday. And the year he retired, he came down with stage 4 cancer and was gone and never got to live out his dreams. And boy, did that hit us hard. We realized, nope, you can't just look always to the future. You've got to have some of that living done now, because we don't have any guarantees.
That's so beautiful. I think I like the people. I think part of Nelson's human behaviors, like somewhere in there, it should be the obsession focusing on the numbers, like the human behavior of trying to get to that, like Tom was saying, really calculated, granular number and rates of return based on, I call it modern financial planning, but I understand his alliteration, typical financial planning.
Right.
It does not take into account exactly what you said. Your entire life, they force you to live within your means, less than, restrict your ability to live now. So
They
you
make
can
slaves
like
of us, quite frankly.
financially, yeah, financial slaves. It's like you have to live within this box. Do not dream outside this box. It's like, man, that's never in the equation. That's never in the S&P 500 is going to be 12% for the rest of your life equation. But because you have to wait 50 years, oh, we didn't get to do that trip or go on that vacation or do this with the
Right.
family or start this business or write a book or take a year off sabbatical, or none of that is in the equation somehow. Very interesting.
Yeah, one of the most wonderful things that I have started to do with my policy is make it absolutely non-negotiable that I am planning a family vacation every year with those dollars. I will replenish them every year and they'll be there to do it again the next year, because those memories, that time that you have together, that is the most important thing that we have, is our time together.
I love that. Go ahead, Kate.
Some of the most fun I'm having with mine, which is unbelievable, because I think I was probably your typical person out there who really didn't understand even banking. You did what you did because that's the way we were raised and you were taught, and everybody did it, and that's how you do it, period. And then now that I got into this, it is just so exciting and so much fun to me, because we recently, Bill got a new car. We literally bought it on my credit cards. He went and took a loan from his policy, and we paid off my credit cards. So now we have the policy loan. But, I got all the stuff, all the benefits from the credit cards too. I got all, whatever those awards, rewards, and whatever were. But now that we're paying back the loan to his policy, it's kind of crazy because it's fun for me. It's like something comes in, it's like, oh, good, you can put it back on your policy, repay that loan. Because I know when we do, we have that money again that we can use over again. Whereas if you were doing it in a conventional loan the other way, you don't even see that anymore. It's just gone.
Gone
So it's
forever.
really exciting now, you know, to do this and know that, okay, so you spent all this money, big deal. We've put so much of it back already. It's crazy to even think how you just can replenish that, you know, just out of it, out of habit. I mean, you just, because you're banking, this is all you're doing. You're putting the money back in the bank. If you take the money out of your savings account, what are the chances you really put that money back? And everything that you took out has stopped earning. So now you're, you know, that's it, dead in the water there. But with this, I love it because I get to keep borrowing. I get to pay it back. I can't wait. And then I just do it all over again. And it's just a lot of fun for me to see how much you can really reuse those dollars. The same as what you're going to do with your family vacations.
Right.
You know, you take it out of there, you're going to put it back. And where else can we do something like this and keep using our money and seeing our money grow?
You know,
I love how
ironic-
you said I get to take a loan.
I know.
So many people, when I first start talking to them about this, they're like, you have to borrow it. I'm like, so I love that you said, yes, you get to.
Yeah, it's great. It's so exciting. And I don't have to
Guess
ask
what?
anybody. I just do it.
No, I mean, it's ironic, but I learned really more about infinite banking from her when she got her policy and maxed it out for 2 years. In the first 8 months, she maxed out 2 years. And out of necessity, out of nowhere else, is she started using it because she had another 12 months before she could, you know, she couldn't take a loan, pay it back with interest because she had no room. So hence it led to the 17 cents banana loan, you know, which I use. But, you know, Dan called me yesterday. Somebody did it I think it was Nolan or somebody did it. They did a talk and they did would you, if you had money at 4% somewhere, would you collateralize it, borrow it at 6? And no, it wasn't Josh. It was Josh, I think it was. But they didn't have the ending. So all my presentations, they look like a little kid did them. They're cartoonish because people don't get intimidated. He used that at one of his talks. And I said, well, when I use that, I like to ask the question before I show them the answer. You know, if you had money at 4% somewhere, would you collateralize it and borrow it at 6? Nobody ever raises their hand. I mean, over the years, you know, maybe 2%, you know, people, you know, maybe I'll raise my hand. The other one I told them, which I love, which just came up, was I like to ask, if you had a 30,000 auto loan and you came into 30 or 35,000, whether a commission, tax return, or death benefit, would you pay the loan off? Nobody raises their hand. Nobody ever raises their hand. I go, why not? Well, because, you know, this might be my safety net. If I spend the money, I'm not going to have the money, you know, I'll have no loan, but I'll have no money. And I tell them just what she said. Everyone that has a life insurance policy that they borrowed against to buy a car, the same situation, if it happens to them, every one of them says they pay the loan back. And the interesting thing is, the people in the audience know the answer. And they'll say, yeah, because they can borrow the money again. It's ironic that it's out there. They've never seen it or heard it. And we, you know, we're like the apostles. We have to spread the word. Thankfully for us, we're not getting crucified for it. But, you know, you hear things, we all hear, oh, you know, that guy's a scammer or whatever. But, you know, it's life changing. And it's just frustrating that more people won't step through the door, no matter what we do.
Well, we're doing what we can to reach them for sure. And I want to give y'all two more things. I know we're rounding out the conversation. Folks have had to dip out. They've let me know. But this is, I want to give y'all one example from my own life, and I want to give you a question. Maybe I can put it to a question, and I hope that it'll encourage everybody that's listening to think about it. And I hope that it will lead to us having more one-on-one conversations with each other, because I do believe that iron sharpens iron, and I love having these conversations. I can't tell you how much I love hearing about that family vacation, Tricia, or UK, talking about using policies and infinite banking for cars. So cool, so realistic. And I love that we can do that here in this conversation. We can talk product, we can talk process, we can talk about our family dynamics, we can talk about our legacy plans and goals and how we're helping people and all this different stuff. What I see in my life, because I can go back several generations in just a couple of miles from where I currently live today, I could go to a great grandpa's, I think it's 3 great or 4 great. Now I'm drawing a blank. And what's the legacy been that's reached me? Well, it's a name. It's a tombstone. And then I think that's it. Right? I think that's what I know or what I've received, right? Now, what I do know is that every generation has had lives and spouses and children and lands and businesses and careers and so many things, right, that filled the time of their lives from there to here where I'm at now. But what was the raw material that I was given? And I'm not trying to come at this with an entitled feel, okay? And hopefully y'all can question me on that. I don't feel entitled. What were the raw materials that I was given when me and my wife got married and decided to forge a life together? I knew where a tombstone was, and I had a name. And I felt strongly about my name, and I still feel strongly about my name, and I want to leave an even better name for my children that I now have and future generations. That's valuable. That's valuable. It's not just money that's valuable. It's not just a state that's valuable, right? But raw material wise, me and my wife started from scratch. And I don't think that I'm the exception in that. I think that most families do start from scratch. And I just feel like if I offered to people 2 scenarios where one is you start from scratch and those that come after you start from scratch, or there's this other one where you can give them something, right? And you decide what that is. And you have the conversations about what they could do with it so that they're not just given raw materials, but you're actually giving them materials that will be coupled with education and conversation and intentionality to level up, right? I hope I communicated that well. So that's just an example from my own life. And then here's the other thing. I was thinking yesterday and talking with my wife. Y'all, I did a project at my property that I could have paid somebody $200 for to do instead of me. But I did it, okay? Because it needed to be done. And I just said, okay, well, today my main project is I'm going to go do this thing. And in a way, it's preposterous to me. Like, I could have paid a grown, capable man who would have done a good job, right? And he'd have been happy to get the $200 to go out and do this thing. But I did it on my property because I was there and I could and whatever, right? But there's a part of me that, you know, there's something to accomplishing something. And I had my sons with me, which I think there's some merit there as well, right? Showing them a good work ethic, myself. But then there's another part of me is like, man, I could have accomplished so much more in that same amount of time, right? And then that made me think back to, you know, earning $5.15 with my first job. All right, and here's where I'm tying this into legacy, and it's a thought that I'm trying to leave y'all with here at the top of the hour. I gave a whole day's hard work as a young man for $5.15 an hour. And here's the thought that struck me yesterday. At the end of my life, if it were possible that the good Lord would give me one more day, if I could pay him $5.15 an hour, would I do that? To have another day with my wife, my children, grandchildren, whatever? The answer is yes, right? Well, I've earned a good bit more than $5.15 now, right? From that minimum wage job that I had way back when. Would I pay that amount per hour to give a full day's labor to having it? Yes, I would. Now, is there some point of diminishing return? You know, if I had $1 million, would I pay $1 million versus just letting my kids have it, and then I get to go on to be with the Lord? Yeah, okay. Well, I'll just leave the $1 million probably for my kids or whatever. So there's probably some point of diminishing returns, but I hope that you're gathering what I'm trying to convey too. That time that you were talking about earlier, Tricia, really is so much more valuable than the money, and yet we every day are exchanging our time for money. So there's really something to both of those. I don't know. I'm trying to leave y'all with that. I'd love to get your final thoughts about that or anything else. Again, I appreciate y'all for being here. Let me, one at a time maybe. Tricia, final thoughts from you.
I guess my final thought on that is just that, yeah, the whole reason for me even thinking about all of this stuff, or even is when you can set yourself up financially, you have bought yourself more time that you can spend with your family, right? So to me, that's what it's all about now, more than just money to buy things, right? It's money to buy time.
I love it. Tom, how about you, sir?
You know, I've always been a subscriber to that, you know, focus on the time, but I came across this the other day and it struck me and said it's really our scarcest resource is our attention, right? And where our brains are focused to do whatever it is we want in our lives and impact what we want. Like, where's your attention primarily? And I know it's very subtle in terms of time, but to me, attention, because we get so distracted in our lives, is easy, right? I can spend time doing stuff and I don't turn around on social media an hour later, but the attention is really key.
Maybe
how you spend-
intentional use of our time.
Yeah,
Yeah.
exactly. Like, where am I focusing? Because it's too easy in the world we live in to get distracted, and days
That's
and
true.
weeks and months and years go by. And so it really struck me because, you know, even if the intention is just sitting with your dog for a moment, right? And just enjoying it, like the attention is worth it. So it is one of the things that just sort of struck me around it because, you know, we can easily sort of forget.
Fantastic. You give me two strong words today, Tom: energy and attention. I love it. Bill, Kate?
Mine is, since I'm probably running out of time, people, but you know, and I've missed a lot of time with my children when they were children because of financial reasons. My thing now is being able to share this with my family, my children, them seeing, not from me preaching, but from seeing how it has changed my life and what I can do now, that they have decided to embrace this same system, this process, and implement it in their lives so that hopefully they will be able to use their time more wisely and spend it together and do whatever it is, however they want to utilize it. So it's just what I've learned. I just thank God that he gave me this when he did, and they could see it and they have grasped it. And passing that on is an amazing legacy. And you?
So I'll just add a little to what she said, then I'll say we were at a wedding this weekend in California. And at one point in the wedding, with tears in her eyes, she looked at me and she said, "I miss so much." Because it was her brother's third daughter, the youngest, that was getting married. And she couldn't go to the first two. I mean, I didn't know any of them, but you know, just recently. So it didn't matter to me, but you know, that's just puts an apostrophe on what she just said. You know, going back to what you said, I don't know if it'll mean I'll live longer. I can pay for more time because my first job, I got paid $1.35 an hour. I wasn't rich like you getting paid $5.15 or whatever. So it might give me a longer period of, I could live a few more days at $1.35, you know. But yeah, I mean, growing up, I spent a lot of times chasing the dollar.
Mhm.
I remember one Christmas working upstairs in the office. What did it get me?
It's a good word.
That's something to think about.
Yep. And I love that we can have these real conversations. And I'm not trying to cut you short there, Bill. Finish it up however you'd like.
You know, and you know, like Tom said, not that we spend our time every, you know, it's just like money. Sometimes we spend it recklessly, sometimes we spend it well. But it's your money, you spend it the way you want, and it's your time and you spend it the way you want. As she started to say earlier, we went for a walk last night and we went a different way because we're at her sister's. And some guy pulls up, it wasn't a golf cart, it was like one of those,
It's called a mule,
a mule. He was on a mule and
you know.
he pulls up across us, he goes, "Hey, you guys need a ride somewhere?" So she said, no, we're just walking. He goes, "Man, I never seen anyone walk down this road." You know, I thought your car broke down or something. I said, "No, we're just trying to lose the fat, you know." So we had a nice conversation with the guy. You know, he's lived there his whole life, and
But it was just nice being here and somebody we had no idea even noticed us came to see if we were okay.
far.
He came pretty far to see if we were okay, out of the blue. Didn't know us, never saw us, had no idea, and ended up having a nice little 5-minute conversation there on the side of the road. And, you know, it's kind of like now we have it, we know if we go down, he told us where he lives, we have a new buddy, we have a new friend. And it's just, that's why we want to live up where we are right now, you know, in the same area where my sister is.
Yeah,
It's
and
beautiful.
then the other thing was we walk down the street that we drive down every day if we go to church when we're here. And when you walk, the properties look so different because some of them are 10 acres, 15 acres, 5 acres. And when you go by, some of them more, and you go and you can really appreciate the house, and then you can really appreciate, because when you drive, you go, why would somebody have that, have it set up like that? But when you walk and you can really look at, now I see, you know, he could stand there and just like,
And that's what this has done for
you know,
us.
you don't hear the hustle and bustle of South Florida or New York or wherever. And, you know, and it, you know, to be able to be stress-free when you've lived under stress your whole life is like probably being enslaved or being imprisoned, you know, like, and all of a sudden they let you out. You know, what do? You don't have to do anything.
That's what this did for me. Let me out.
Well, I love that. I appreciate that you're sharing, hey, this is something that's different in my life now because I've been able to implement infinite making. I literally got to go to this event, whereas, you know, I might have missed some others before. Incredible, super incredible. So let me thank y'all again for coming. I'm looking forward to future conversations.
Plus, thank you again, Jesse.
Yep.
Thank you so much.
Appreciate you.
Take
Well,
care.
that was an absolute pleasure for me to host so many of my friends at the round table today. If you would like us to cover a particular topic in the future, put that down in the comment section below. Everyone's contact information will be in the show notes. And my wish is always that you will live and leave a lasting legacy, you can find me at durhamtalents.com. Have a great day. Take care.